So now we will be doing numericals for this topic, consideration other than cash. Now see this question first. It is saying X Limited purchased the business of Y Limited. Be careful in reading the questions, because I will show you in exams what type of mistake you will be doing. Who is purchasing the business? Can you tell me who is purchasing the business in this question? Yes, X Limited is purchasing the business. Okay, fine. From Y Limited. Business of whom? Y Limited. For rupees 9 lakh. Payable in fully paid shares of rupees 10 each. Means you have purchased business of Y Limited, you are X Limited, and you are purchasing the business of Y Limited. And the amount decided for payment is rupees 9 lakh, which you how will be paying? It is to be paid in fully paid. Whatever the amount of business is decided, for that value you have to issue the shares to the shareholders of Y Limited. What entries will be made in the books of X Limited? Question is asking the journal entries in the books of X Limited, not in the books of Y Limited. So be careful in these questions. If such issue is at par and at premium. So means there are two types of questions when you are issuing shares to Y Limited at par, and second question is when you are issuing shares to Y Limited at premium. Now see how you will be doing it. So I will be just making two formats for that purpose. Okay, so this is journal of X Limited. You have to write heading like this. And you have to keep space for working note also, if any required. Now see first entry, you are purchasing the business of Y Limited. Now when you are purchasing the business, what actually you will be purchasing? Assets, obviously, and there are two things in the business, assets and liabilities. So you can purchase only assets and liabilities of the business. So because here it is not mentioned what amount of assets you are purchasing and what amount of liabilities you are purchasing. So that's why I will be assuming that we are purchasing the assets, or you can say net assets. So various assets will be there, but we don't know the names also. What are the names of those assets? Sundry assets account, debit. 9 lakh is the value of the assets which you are purchasing. To now, from whom we are purchasing? From whom we are purchasing? Yes, Y Limited. From Y Limited we are purchasing. Most of the students generally write here X Limited. That is the biggest mistake they do. They were doing the question right, but because they write here X Limited, that's why the whole question was wrong. So that's why be careful in writing journal entries. You have to attempt the question in the same manner which I am telling you. To Y Limited. Now the amount due to Y Limited will be 9 lakh. Narrations, please manage on your own. Once I am showing. Business purchased from Y. Now second entry will be you are issuing them fully paid shares. So Y Limited will be compensated Y Limited debit 9 lakh. So for 9 lakh you will be issuing shares to Y Limited. To equity share capital account. Because types of shares has not been specified here, so we will be assuming equity shares. Now equity share capital account. So because I will be issuing shares to Y Limited for rupees 9 lakh, so share capital will also become 9 lakh. Narration. Now, how many shares you will be issuing to Y Limited? Can you tell me? How many shares you will be issuing to Y Limited for rupees 9 lakh? Yes, yes, fine. Because the face value is rupees 10 and we are issuing shares in rupees 10 only. At par means rupees 10. So equal to face value. So that's why 9 lakh divided by 10. It will be 90,000 equity shares issued to Y Limited. So in this way, your question will get complete. Yes, till here it is clear. Working note you can show here number of shares to be issued to Y Limited is equal to 9 lakh divided by, remember this formula, issue price. Issue price is how much in this question? It is also rupees 10. Face value is also rupees 10 and issue price is also rupees 10 because we are issuing shares at par. 9 lakh divided by 10. So it will become 90,000 shares. Now coming to the next part. Shares issued at premium. Will there be any change in the first entry when we are purchasing the business of Y Limited? Will there be any change? So it will remain same. So this entry will not be affected even if you are issuing the shares at par or at premium. Because in this entry you are not issuing shares. You are just purchasing the business. Please increase your participation in the class. Okay. Now coming to the second entry. So second entry will remain to an extent same. Only little change is there. Because this time you are issuing shares at premium. So premium account will also come. So this will be the journal entry. First, be clear about the journal entry. First, tell me the journal entry is clear or not. When I am issuing shares to Y Limited at premium, I will be doing this journal entry. So first journal entry should be clear. Okay, now coming to the amounts part. For amounts part, first we will prepare a working note. See, this amount will remain same because I have to pay 9 lakh to Y Limited. Now I have to calculate these two amounts. How I will be calculating? See the working note. First working note, face value of the share is equal to rupees 10 at premium, or I should write securities premium. Securities premium, how much? 25% at the rate of 25%. So it will be 2.5. 2.5. So now if I want to total it, means it will be the issue price of share is equal to rupees 12.5. So now first be clear about the issue price. Yes, issue price is clear to each and everyone. Yes, you have calculated it on your own also. Very good. Now this is the first working note. Then second working note. Number of shares to be issued to Y Limited. Now purchase consideration is how much? Purchase consideration is rupees 9 lakh. I have to pay Y limited by 9 lakh. Then issue price is equal to rupees 12.5. So number of shares is equal to 9 lakh divided by 12.5. I have to give a certain number of shares to Y limited. So I have to decide that number. Now how I will be deciding? The total amount to be paid is 9 lakh, and the thing which I am paying for purchase of the business is shares. So how much one share is costing to Y limited? That cost I have calculated 12.5. So according to that value, I will be giving the number of shares. Now can you tell me how much it will be? You can simply solve it like without calculator. If you want to solve it, don't take a lot of calculators. Increase 10 in the numerator and divide by 125. Now you can simply cut it with the help of 5 and keep it cutting on. So it will come 72,000 shares. So don't depend on calculators. Try to find out the ways. Now capital will be as per the face value. Capital is equal to 72,000 multiplied by 10. Face value is rupees 10. So the capital will be 7,20,000 and the premium on one share premium is rupees 2.5. 72,000 multiplied by 2.5 is equal to, it will be 144 and 36, 150, 180, 1,80,000. So that way you should be able, you should do it fast with multiplication also. 72 multiplied by 2, it will become 1,44,000. And 72,000 multiplied by 0.5, it will become half of the 72,000. That will become 36,000. So 1,44,000 plus 36,000, that will become 1,80,000. So make your calculations fast in such manner. Don't depend on the calculators. Now I can write the amounts here. I hope the working note is clear to each and every one of you. Capital amount is 7,20,000 and then the premium amount is 1,80,000. So now you can see our debit credit is equal. Yes, please. So it is clear now. When shares are issued at par, how you will be doing journal entries, and when shares are issued at premium, then how you will be doing calculations. So here in the narration, I will be writing 72,000 equity shares issued to Y Limited at a premium of is 2.5 per share. For every time to find number of shares, we have to divide by issue price. Yes, one query is there that whenever we have to find the number of shares to be issued, we have to divide the purchase consideration amount by issue price. Yes, it is like that. This amount which you have to pay to Y Limited, which amount is due, what we technically call it. I have spoken this word for 3-4 times in the class. Can you name it? What we technically call it? It is called purchase consideration. It is called purchase consideration. The amount which you have to pay to the vendor. Clear? then in this case we have again divided the purchase consideration by the issue price. That's why I have given you this formula here, that you should remember. You should not get confused in any question. First calculate the issue price of the share and then proceed to calculate the number of shares to be issued. Okay, now start sending me answers for this. I am reading the question. Tulip Limited issued 50,000 shares of ₹10 each, credited as fully paid to the promoters for their services. Now you are issuing shares to the promoters. 50,000 shares of ₹10 each you are issuing to the promoters. It also issued 30,000 shares of ₹10 each, credited as fully paid to the underwriters for their commission. So this question is for shares, issue of shares to the promoters and underwriters. So first I will be doing promoters. So what account I will be opening? In corporation cost account debit to equity share capital account. This will be the journal entry. Now coming to the amounts part. In this chapter, I will advise you all that first focus on the journal entry whenever you are solving a question. First make it properly. Think over that, focus on that. When you complete your journal entry, then come to the amount section. It will always help you. Now how many shares we are issuing? 50,000 shares. The face value of the share is ₹10. So this way you please ask question yourself and answer it properly from the question. So that's why the capital will become 5 lakh and the expense will also be 5 lakh. Narration will be 50,000 equity shares issued as fully paid. Fully paid means nothing has to be collected from the person to whom we are issuing the shares. As fully paid to the promoters. So this will be the narration. Now coming to the next part. Now we are issuing shares to the underwriters. So underwriting commission, first we will book the expense. Underwriting commission. If anyone is not getting or any doubt is there, you can ask me. Commission account debit. Underwriting commission account debit. Now how much will be the amount? Okay, now we will come on the amount later on. First we will complete our journal entry. To underwriters. Now come to the amount section. Because we are issuing 30,000 shares, face value ₹10. So if you multiply them, that amount will become 3 lakh. And because question has not told us anything, so that's why we have to assume it 3 lakh. Now I hope this point is clear. We have to pay 3 lakh to the underwriters. And the narration will be underwriting commission due. Underwriting commission due. Then now I will be issuing them shares. Underwriters account underwriters debit. To equity share capital account. Very good, very good. So now we will write the amounts. It will be again 3 lakh and it will be also 3 lakh. Now we will write the narrations. 40,000 equity shares issued as fully paid to the underwriters. So that's all about the numericals. These are the simple numericals. However, we will be doing some complex numericals tomorrow. But I hope this topic is clear, whatever we have discussed today. In this balance sheet part is not there. So your number of shares issued will increase, subscribed and fully paid up will increase accordingly. How many shares you have issued? 50,000 plus 30,000, 80,000. So 80,000 multiplied by 10, 8 lakh is your issued capital. We rate share capital. See, here nothing is due. When you are issuing shares to the promoters, nothing is due. We can do incorporation cost account debit to promoters and promoters debit to equity share capital. That we can do. There is nothing wrong in that also. Now clear? Okay.